Thanks for staying on SABC News. Let's take a look at your market news now. Asian stocks slid today with the prospect of high interest rates and sluggish growth spooking the markets. Hong Kong's Hang Seng was slightly down. Mainland China's Shanghai index shed 1.2%. Japan's Nikkei declined by 2.5%. Let's go to Wall Street now, where Wall Street's main indexes all tumbled on Friday as rattled investors continued to reposition themselves amid fears that the U.S. Federal Reserve's hawkish rate policy will help tip the American economy into recession. The S&P 500 lost 1.69%, the Nasdaq Composite Index lost 1.75%, and the Dow Jones Industrial Average fell 1.57%. All three indexes also recorded sharp weekly losses. The pound sterling crashed to a record low amid fears that the new government's economic plan will stretch Britain's finances to the limit. Traders scampered for the exits, propping the US dollar to a new two-decade peak against a basket of major peers, while the euro has hit a fresh two-decade low against the greenback. The pound slumped as much as 4.9 percentage points in early London trade. That followed a 3.6% drop on Friday, when new Finance Minister Kwasi Kwarteng unveiled historic tax cuts funded by the biggest increase in borrowing since 1972. Yesterday, Kwarteng dismissed the freefall in the pound, saying his strategy is to focus more on longer-term growth and not short-term market reaction. Sterling also tumbled 1.3% against the euro, having hit its lowest since September 2020. The JSE is in the red at this hour. The all-share index has shed 0.2% to 63,270. The industrial 25 index is 0.3% firmer. Financials have declined by 1.2%. Markets in Europe are flat at this hour, and the rand is trading at 18 rand and 6 cents to the dollar, 19.37 to the pound sterling, and 17 rand 46 to the euro. Gold is trading at $1,643 and platinum at $854 per ounce. The price of Brent crude oil is at $85.55 a barrel. Let's get some analysis on this. Bright Kumalo from Vestec Asset Management is standing by to talk to us through the market picture that we're seeing. Bryce, a very good afternoon to you. We saw global financial markets taking a knock as the Fed raised their interest rates by 75 basis points on Friday. Just talk us through that global market picture at the moment.
Yeah, looking at, global markets in general, if you look at the world index, we are headed, to 2020 lows when we were all, surprised about COVID. And if you look around you today, we're not really in that type of environment. We're not in the middle of a pandemic, but the issues are different, and the reasons for these markets to be down are very different. And like you said, you touched a bit, central bankers across the spectrum in the West and in the East are, increasing interest rates to try, fight rampant inflation before it becomes runaway inflation. And, the reason is that risk, sensitive assets are taking a knock right now, and we find ourselves where we are.
Mm-hmm. Right, the World Bank has released a study saying that there is a recession coming in 2023, attributed in part to these interest rates we're seeing across the world, which seem almost coordinated. Just your response to that?
Look, I think the World Bank, they're not alone. We've seen a couple of, economic houses or economic consultants saying a similar thing. At first, they were saying it will be at the tail end of 2022, but now most of them are saying it's 100% for sure next year, sometime next year. So, I don't know, man. If you do push, as a central bank, if you do push interest rates too high, it becomes really hard for your consumers in the economy to afford even some of the basic stuff. We're seeing some of the core inflation that we're seeing is actually coming in basic food stuff, and that would cause the economy to grow negatively for consecutive quarters, and then obviously going into a recession. But yeah, that's what's happening there.
Mm. And then Asian markets tracking that gloomy sentiment of the US and the one that you're talking about now.
Yeah, I mean, unfortunately, the pressure is unrelenting. Like you said, Tokyo stock market was down by 2.7% the last time I checked. Hong Kong was sort of, fluctuating, but, the mainland China bourse was down a lot. Also China, they're having their own problems there of growth because they're struggling to fight growth, and the yuan is also weakening in tandem with many of other major currencies against the US dollar. The Japanese yen is experiencing the same thing, but Japan policymakers are trying to keep that currency stronger, but they don't seem to be actually succeeding in that because the US dollar is sitting at, like you said, it is 2-year high. As investors, that's where they're finding sort of a haven for their cash. So when someone said cash is king, I believe that person was American because all they were talking about is the US dollar, not our cash here or in Southeast Asia, unfortunately.
Yeah, so when we're speaking about that US dollar being king, the rand opening at 18 rand 4 cents to the dollar today, ouch, what's going to happen there?
Look, I think it's been close to 8 years now where fund managers were saying that, if you look at things like the McDonald's index, the US dollar is compared to, the rand is compared to the US dollar, it's the cheapest it's ever been. It keeps getting cheaper, unfortunately, and there's nothing we can do as South Africans except to just look and painfully and cry, because I mean there's just what you can do. Because you can try more and try to negotiate with your employer here. It's not going to be that easy, but I mean we try what we can here in South Africa. We will rebuild.
Yeah, but okay. Besides crying, Bright, just talk to me about how it's going to affect us in terms of prices, especially when it comes to the price of imported goods.
Yeah, I mean, you make a good point there because most trade is actually done in US dollars, right? So things that we import, even from Southeast Asia and other, Western countries, all of those transactions are done in US dollars, and a weakening rand is not good. But it's also very positive, for net exporters in South Africa, like the mining companies, like the one we're going to talk about just now. So that's, you have to take the good with the bad when it comes to, trade, per se, different, yeah.
Okay, when it comes to the mining companies, Anglo American PLC announcing the start of its commercial copper operations in Peru.
Yes, so the factory, the mine you're referring to is Quellaveco. I think that's the one in Peru. They said they had about 300,000, tons per year that they could produce from, that mine. And obviously they've, crossed the last bit of regulatory hurdles. And, that's going to increase basically their copper, output by 10%. In terms of, the total copper production that, they have in their stable. So this is good for the company and the shareholders who, are invested in the company.
Then when we're taking a look at company news announcement, or reports rather, that Remgro is set to sell its stake in Total Energies. What's the story there?
Look, this is an opportunistic exit if it's, it's true, because for now it's just hearsay.
Reports,
the last time this asset was valued about 2.5 billion rands, its book value, according to 2021 financial statements of Remgro. But it makes sense. I say opportunistic because it makes sense. We're looking at the oil price. It's sort of, looking really good here. I hope they could actually command a higher price than the 2.5 billion that we see. And Remgro has been holding this asset for a very, very long time. It does make sense maybe if they want to, disinvest from it because it's not part of the core, business assets. That will make sense. They'll use the cash maybe, to do share buybacks or pay, bigger dividends, or maybe even go on increasing stakes in what they see as their core business here in South Africa, core investments in, in South African businesses.
Brad Kamado from Vestac Asset Management, thanks so much for your time and insight this afternoon as we take a look at what's moving the markets. It's time for a short break. When we come back, my colleague Nompumelelo Siziba taking you through the rest of On Point's business news. Good afternoon from me. Stay safe.
Father's Day when we were watching Simunyamara.